In this session, we're going to talk about the Australian dollar and why it's been dropping. We're also going to talk about the Fed. In this case, we'll be trying to cover what to anticipate and what to expect for today's meeting and the September meeting. My name is Samson Mzera and welcome to this episode of the Market Watch series, where we'll be taking you through the charts, the news, and everything to do with the markets. Remember to subscribe, like, and share this for more. Earlier today morning, we had the Australian CPI numbers coming up, and the inflation was actually lower than the previous inflation print. And this is somewhat good news to the RBA, but in the context of things, we've been seeing the Australian dollar selling off against the dollar for quite some time now. In the bigger context, news that is in this case providing negative impact to the Australian dollar has actually amplified or has actually strengthened that downtrend that we've witnessed. So you've seen a sharp drop in the Australian dollar this morning, and that trend is looking highly likely that it might continue. Number one, traders have been placing shorts on the Australian dollar based on the fact that the economic situation in China is weakening. Remember that China is the biggest trading partner for Australia, and the fact that earlier this week, for example, the cut rates shows the situation in the Chinese economy at the moment. And this is what is piling on pressure on the Australian dollar. We do expect them to hold these rates at the moment. So it doesn't look like the low inflation reading is going to provide any room for cutting anytime soon, because inflation is still at an elevated level. However, based off the context and the look of things at the moment, it seems highly likely that we will continue seeing a sell-off in the Australian dollar, and traders will be looking to see any key levels below the current price that it will continue to. However, if we see any significant pullbacks, then it's important to watch out for any key levels on that downtrend that might cause some resistance in this upwards movement of the Australian dollar. However, the trend at the moment is highly likely to continue in that same trajectory. Now, speaking of the Fed, we have the FOMC meeting today, which is I think 4 more to go from here after this one is done. And traders and a lot of investors are expecting that we should see a hold in interest rates this time. However, we have September coming in, and a lot of traders have almost priced in 100% probability of a cut. And that is what we'll be looking at today. Any cues, any tones, anything they say that is projecting or is going to make traders anticipate that this is the language for cuts is what we'll be looking for in today's meeting. So the minutes and the readings are almost fully priced in that we will have no cut today. However, the FOMC press conference is where traders will be keeping an eye on to see exactly if the Fed will start introducing the market to the rhetoric of having cuts, and that's what we'll be looking at. So in the market today, the dollar index might stay a bit stable. We have seen some strength in it. It's broken a previous key level, and we are seeing some slight strength in it. But the determinant of this, for example, if it was to be a reversal, then it depends on the tone of the Fed today. If they're still very tough on inflation, if they're still very cautious, then this might provide some support for the dollar. However, the market is looking for even the slightest cues for the dollar index to go lower, and that's what traders are focusing on. We have a very packed day for central banks, and we'll be keeping an eye on the news events to see what's going to transpire. We do have a space in the evening where we'll be commenting about the FOMC, so make sure to stay tuned to that also. And having said that, thank you for tuning into this session of the Market Watch series. If you want to trade the Australian dollar or the Japanese yen or the US dollar, be sure to click the link in the description, and see you in the next one.